Stocks slide across the globe on high interest rate worries as Silicon Valley lender SVB Financial reports losses on its bond portfolio. Asian markets fall up to 3%. Upcoming U.S. non-farm payrolls report adds to the nervousness.
The Wall Street bulls suffer a bruising blow courtesy the global sell-off. The market, however, sees some buying at lower levels, with the Nifty still down 1%. Financials and IT stocks see the biggest cut. The Nifty Bank is down almost 2%.
Tata Motors bucks the weakness as the company's IT services arm Tata Technologies files a DRHP with the market regulator SEBI. Tata Tech will be the first IPO from the Tata house in 2 decades.
And Equitas Small Finance Bank shares fall as its reverse merger with Equitas Holdings gets completed, and shareholders are allotted Equitas Small Finance Bank shares for trading starting today.
Hello and welcome. You have tuned into Business Lunch. I'm Nisha Poddar, and as always with me is my co-anchor Pavitra Parekh. It's a difficult day of trade for the bulls, Pavitra. Take a look at the global markets, the nervousness as well as the cues our own Indian markets have picked up from the global arena that is really putting a lot of pressure on Nifty 50. So at the moment, 176 points down on Nifty 50, 17,412 odd levels is about 70-80 bucks higher than the low point of the trading session. So some bit of buying seen at the lower level, but not as much to give any relief to the bulls today. Sensex is down 680 points. Bank Nifty, in fact, the big-time financials are the ones which are really taking the lead in the nervousness, 1.8% down, a huge underperformance to the key indices as well. As far as mid-caps are concerned, slight outperformance, but nothing really to talk about, 0.9% down there. So overall, a shade of red. Some of the outliers when we talk about the ones in green because of Tata Motors news flow, some of the PSUs like Power Grid, NTPC, and some of the others stray like a contra call like ITC are the ones holding up in the green. But if you really take a look at the financials, a huge drag, and also big boy Reliance Industries, HDFC Limited, as well as some of the other key players in Nifty 50, all down and out, putting a lot of pressure there, Pavitra.
Oh, absolutely. The financials clearly looking the worst today. But, I was looking at the sectoral indices for the week, and literally everything except for the PSE index has seen cuts come through this time around. So the largest sort of moves on these indices will be up for you on your screen so that you can see that. The CPC index is done very well. It's up almost 2%. So that one is holding very well. Even today, in fact, in this falling market, it's managed to move into the green. But the rest of the sectors you can see have seen severe cuts. The IT pack was holding up for the beginning of the year. Even when, we saw banks come under pressure, that is not something that we're seeing continue anymore. So that is something to watch. The financials, like Nisha pointed out, pull up some of the smaller banks as well. So you can see the these are, of course, the larger names, but something like a Canara Bank, Karnataka Bank, RBL, these ones are seeing sharp cuts. Bajaj Finance is down 4.5% this week. So, that entire pack under pressure. What's holding up well today is the FMCG pack. So that one is, that sole spot of green. So you can take a look at the moves seen on HUL, ITC, Britannia. These are a few of the good, the stocks which are holding up relatively better. And the sugar names as well has been one saving grace that we've seen through the week. But that's what's going on in terms of individual stock-specific action. Overnight, the big global story was, of course, that U.S. banking stocks saw their worst day since 2020 in last night's trading session. So what really led to this sell-off? What is the kind of impact that we're seeing because of this on global markets? Rima is here, and she's at the big wall to take us through all of the details. Rima?
Well, thank you very much for that. Let's start with the Asian market picture, where you are seeing deep cuts. Hang Seng is down close to about 3% The Korean markets, Chinese markets are seeing cuts of 1% and 1.5% respectively. This follows the deep sell-off that we had on Wall Street, where the tech-heavy Nasdaq was down nearly 2%, but even the Dow Jones had a cut of 1.7%. So what led to this rout? Well, it's the financial space, and here we had 2 big financial stocks which collapsed. The first one is SVB Financial. This is the parent company of the Silicon Valley Bank. This is a bank which largely funds in banks, tech startups, and SVB Financial plunged 60%, and it's at the lowest level that we've seen since September of 2016. That's one. The second one is Silvergate Capital. Now, this is a US company, a financial company, which is a crypto-focused bank. And this saw a decline of 42% as it disclosed its plans to voluntarily wind down operations and liquidate. Now, the ripple effect of these two financial accidents was felt across the rest of the banking sector. KBW, that's a banking index. It's a benchmark, and it constitutes nearly 24 of the financial stocks in the United States, and that was down nearly 7%, its steepest drop since June of 2020. Now, what is the market worried about? The market is worried about potential losses in the huge bond portfolios held by the other US banks. Is there going to be a contagion impact? And secondly, the very sharp interest rate increase that we've seen in the last 12 months in the United States is hitting the frothy corners of the market, the tech and the cryptos, which is why SB Financial caters to the tech sector, while Silvergate caters to the cryptos. In fact, let me put out an interesting tweet which came out from Uday Kotak, and you've got it on your screen. He says the overnight developments in the US banking markets, analysts, investors underestimate the importance of financial stability for the balance sheet of a bank. When interest rates move up by 500 basis points from zero in 1 year, an accident is waiting to happen somewhere. And that's what we had yesterday. There is also anxiety about the non-farm payroll data, which comes out at 7 p.m. India time. Remember, the January number, that's last month, was not just hot, it was sizzling hot. The market was expecting a figure of 200,000. We got a number well over 500,000. What does February have in store for us? Remember, the market has been underestimating the strength and the resilience of the US labor market. The actual number has beaten consensus for 10 straight months, the longest since 1997. And that's going to be the big data point that we will be tracking today. Back to you.
All right. Thanks so much, Reema, for putting all that together. And yes, the global market and accidents over there having an impact globally as well. We have to brace up for some more cues coming in from the global market, as Reema was pointing out. Let's also hear out some views on that. What Nilesh Shah, the managing director at Kotak Mahindra AMC, had to say on the state of the market and the fallout from the shutdown of the Silicon Valley Bank.
The market is trying to get adjusted to Fed's comment on higher for longer. Not long ago, Fed terminal rate was 5%, then it became 5 quarter, then it became 5.5, now it is 6. And if you are going to get 6% risk-free return in US Treasury, then equity risk premium has to go up, valuation has to come down. SVB, a canary in the coal mine, is it predecessor of what's going to happen in US banking sector? That undoubtedly is a worry. We just have to hope and pray that Fed does not hit up Danda so much that the entire system goes through a crash like 2008. I'm sure Fed will have some institutional memory of 2008.
All right, that is some important opinion coming in. But the sell-off that we've been talking about in asset classes is not limited only to equities. In fact, cryptocurrencies also saw the longest long liquidation in a month, with Bitcoin and Ether falling up to 7% each. Manisha is here to tell us more about what really went down there. Manisha.
Well, yes, what started as a very strong year for the cryptocurrency markets, clearly last night or last 24 hours has seen a big crash coming in. It actually has been the largest long liquidation that you have seen come in for a month. The crypto traders endured a $307 million of a loss in last 24 hours itself. And if you look at Bitcoin standalone, that has suffered a loss of $112 million, and Ether liquidation surpassed nearly $73 million as well in the same time period. The major losses also came in on the top 3 exchanges here. Binance, for example, saw a sell-off come in for $104 million. OKX came at $79 million and Huobi at $45 million as well. The sell-off came in because of 3 or 4 factors. One, you've seen a sell-off come across asset classes. So that whether it was equities or commodities or many of the major high-yielding currencies, all of that declined. Second is Silvergate, which is a crypto-friendly bank, also is winding down on its operations, saying that they have seen lower participation in last couple of years and more losses being incurred there. And then US authorities are in the middle of transferring $1 billion worth of cryptocurrencies that they acquired from dark web into government wallet addresses and Binance wallet addresses. And it means that this would perhaps come into the market in sense of a sell-off, and that also weighed onto the markets there. The Bitcoin also is looking at decline after the crypto financial services company blockchain.com has suspended its asset management arm. So there are various big companies, big names now curbing, cutting or winding down operations, and that weighed onto the cryptocurrency markets. Bitcoin range for this year until now has been between 16,000 on the lower side to 25,000 on the higher side. But in last 24 hours, we've seen 7 to 8% of a cut come in for Bitcoin. Ether is down 7%. Tron is down 9% overnight and 25% down in last 1 week. Polygon is down 7% overnight, 16% down in this week. And Solana as well down 9% overnight. And we have seen 20% of decline come in for this one as well in the past 1 week itself.
Welcome back. You're still watching Business Lunch, and let me bring you some exclusive opinion now. Moneycontrol.com's Dinesh Unikrishnan caught up with Keki Misri, Vice Chairman and CEO at HDFC, and asked him about the mega merger between HDFC and HDFC Bank, the role of NBFCs in increasing credit offtake, as well as his expectations from RBI's next policy meeting. So let's listen in to some excerpts from that chat.
Regulations have to become aligned. You can't have different regulations for different entities, unless and until it is required by some, for some reason. So I don't think that's a regulatory arbitrage which led to the merger. Let me correct that.
Okay.
It's not that it was a regulatory arbitrage which led to the merger. The merger made sense today because the regulatory cost of a merger today has come down significantly compared to what it used to be historically. I think NBFCs have a very important role to play in the economy and should continue to play an important role in the economy. When rates go up, NBFC's cost goes up faster. When rates come down, NBFC's cost comes down faster than
correct.
That. So that's it's the nature of the business. It doesn't mean that NBFCs will go out of business or that the competition is going to kill NBFCs. NBFCs typically cater to a market that banks don't cater to, many NBFCs.
Yeah.
And they have a very niche customer base which will always remain a strong customer base for that NBFC. And banks would find it difficult either to penetrate to that market or to reach that market, or they'll have their own risk aversion which will prevent them from doing that. Our inflation was caused more by the Gulf, by the Russia-Ukraine war,
yes,
which resulted in higher oil prices. In my opinion, a 25 basis points hike in rate is possible in the coming period. I still do not see much more than 25 basis points. The comments made by the US Fed yesterday are a little worrisome. We need to evaluate that because the US Fed has once again said that rates will remain high and the trajectory may be even higher than the market expected. We need to see how that evolves over time. If Fed continues being more and more aggressive in their rate hikes, then again it's a position we'll have to keep evaluating.
All right, to another news development, the state government of Tamil Nadu will reintroduce a bill to ban online gambling. And this after the governor returned the first bill tabled by the government, questioning the legislative competence behind the passing of the bill. Jude is now joining us to tell us more about this development. Jude.
Well, what I can confirm is that Tamil Nadu Chief Minister M.K. Stalin has headed a cabinet meeting which has decided to reintroduce that bill to ban online gambling. And this, of course, comes after Governor R.N. Ravi returned the first bill, of course, that was sent to the governor for assent. State Law Minister S. Raghupati, in fact, confirming that a fresh bill is being worked on and will be tabled on the floor of the House. Incidentally, the new bill and the old one, of course, for that matter, are centered around four main entries as far as the state list, according to the 7th schedule of the Indian Constitution is concerned. That's entry 1, 6, 33 and 34. But more specifically, the Law Minister said, hinged on 34, which pertains to online gambling and betting. Now, interestingly, the bill was returned by Governor R.N. Ravi since he felt that the state legislator lacked the legislative competence, these were his words, in terms of, enacting this ban. Whereas the minister also reminding, the people he spoke to when briefing about this ban itself and the second bill, that the Madras High Court, which in fact ruled that the government could enact legislature towards the ban eventually simply meant that the question of legislative competence does not even arise in the first place. So a second bill hoping to ban online gambling from the Tamil Nadu Assembly can be expected in the near future, even as Governor Ravi has returned the first one to the state government itself.
All right, Joe, thanks a lot for taking us through all of the developments over there on Tamil Nadu and the bill to ban online gaming. But with that, we do need to get into a short break on the show. On the other side, we're going to bring you the latest on the Australian Prime Minister's 4-day visit to India. So stay tuned for that.
Welcome back. You're watching Business Lunch. Let's take it straight to a national development of the day. And Prime Minister Narendra Modi and Australian Prime Minister Anthony Albanese addressed a joint press conference and signed key deals at Hyderabad House in the national capital. Now, the two leaders discussed several important issues to boost the bilateral ties in areas of trade, investment, defense and critical minerals. External Affairs Minister S. Jaishankar also met the Australian Prime Minister and discussed key aspects of the fast-tightening Indo-Australian ties.
Okay, those are some important developments coming in. But with that, we do have to wind down on this edition of Business Lunch with the news that there's really not much of a move seen in the markets right now. We're still over 1% in the red for the Nifty, 190 points gone there, and a bulk of the pain coming through from the financials today, 780 points lower on the Nifty Bank. Thanks a lot for tuning in. Mid-Cap Radar is up next to take you through all of the action.